evening, good evening. Y'all don't mind me. I'm laughing at Rhonda. I'm laughing at Rhonda comment. Rhonda posted this at 4:40. 4:40 this afternoon. Man, I tell you, boy. Good evening, good evening, good evening. Good evening, fine. Did y'all catch I still boy? I did. Guess what? I don't know where I need to start over. Oh, guess. And I did, and guess what I don't know is I need to start over. Fell asleep on the third hour, but it was fascinating. Yes, it was. Yes, it was. I actually jotted down. I was taking notes. I was being a good student. I was taking notes in the. Oh, let me show y'all what I did before we even get into it. Y'all know I got my book here where I be like taking notes. These my notes from today that I took right from the thing, right? But I put a section in here. It's called and I got CBC ICT Price Action Chronicles, and I got the little tab up here. Say ICT live stream. So I'll be keeping my notes inside here along with my other stuff inside my master plan book. But before we get into, I'm gonna go through some of the notes. I was taking some notes for studying, and I was taking some notes for what I wanted to share tonight because I get it to that. I get it to that. Good evening, good evening, good evening, everybody. If this is your first time tuning in to Tim's Tidbits, allow me to say welcome. If it's not your first time tuning in to Tim's Tidbit, I still want to say welcome. But I also want to give you a nice hearty, well, thank you for always tuning in to Tim's Tidbits and hanging out with me and my homeboy back here. His name's Spidey. He's always chilling by the window. I've been trying to rest my throat. I've been trying to rest my voice, my vocal cords. My wife was like, you probably losing your voice because you be screaming on your lives. And then the other day you was in there fussing at the boys. So I was like, yeah, when I was yelling at the boys, that did do it because I was hot and I was at the top. You know what they say, screaming from the top of your lungs. If the top of your lungs right here, I was screaming from here. You know when you get sick of it, when your teenagers done got on your nerve and you just want to punch them, but you can't punch them. So it's like you can't do nothing but just scream hard as you can because you be wanting to just, ooh. Yes, sir. But anyway, come on back, Tim. Come on back. There you go. My name is Timothy Lee Rogers Sr. If you don't know who I am, I get on Al Gore's internet every single day. Once at 9 a.m. Eastern Time and once at 6:30 p.m. Eastern Time, Monday through Friday, to talk about the price action. Why do I talk about the price action? Because if you want to be a long-term investor, if you want to be a swing trader, if you want to be a day trader, anything dealing with putting money in the market and taking money back out, being able to read the price, I believe, is an essential part of your back utility belt, your toolbox, your strategy, whatever you want to call it. It's an essential tool to have. So that's why I do it. I get on here every single day and I share my thoughts on the price action, talk about what price is done, talk about what we think price is going based off what price has done. That's how price action works. You look at what is done to determine where it most likely will go. And with that being said, that sounds like something you want to do, come over here and hang out with us. Hit the subscribe button, wherever it is, on the bottom of your screen. We're trying to get to 2,500 subscribers, and we're getting close. We're getting close. And if you already subscribed, do me a favor. Share it with your friends and family. Be like, hey, I know y'all into this stock market thing too. I know y'all want to learn about it too. Come on over here and hang out with us in the Spider Gang. Tim is slap crazy, but I really enjoy his content, and I think it will help you too. Come on over and subscribe. And if you're really feeling froggy, and you want to support the channel financially, it's a link around here where you can do that too. Click on that and figure that out. I ain't going to talk about that right there now. Now, what I do want to talk about, I want to talk about ICT's first live stream today. I don't know what you come to do, but I came to be a student. I ain't trade nothing today. I did look at my chart. My charts was open because I was sitting back here. My charts are open, but I was focused on what he was saying with my pen. This my fancy dancy pen right here. I got this pen when I think I got this pen out of this. It was this thing, like this angel investing thing. It was a pretty nice little box. I think I got it out of here. It's like I signed up. It's like Angel and Entrepreneurs or something. And is this the pen that was there? I think this is the pen that was there. Y'all don't mind me. Was this the pen that came in there? If this wasn't the pen that came in there, I think it was. Yes, that was the pen that came in there. Pretty good, pretty nice little pen. They gave me some little card saying that I signed up at some elite thing, and it's a book that I've never read called Hustle. Hey, look, it's a yellow book, but I can see through it. But anyway, I got the pen. The pen came out of there, and I'm like, where did I get this pen from? And I just thought about it when I was sitting here with y'all, sitting here talking about it with y'all. Oh, this is the actual card that comes out. We got two of these. We actually got two of these, one for my wife and one for me. It's a pretty nice little card. It's made out of metal. Say, Angela, I've never, like, sometimes I be doing stuff and I never go back and look at it. But anyway, they're supposed to send you like companies and stuff that they researching. And if you want to invest in the startup companies, you can. It was a whole thing. We invested in a couple companies. One of them folded during the pandemic, and one of them is still going. We actually got some of the stuff in there that they sent us. They sell the stuff in like Costco and different stores and stuff like that. Hopefully they keep doing good and it be a worthwhile investment. But anyway, I lost my train of thought. Today I was watching ICT. I can't remember what I was saying, but today watching ICT. I don't know about you, but I felt like it was amazing. And I know what I want to do. I want to go through my notes, and I got some notes that I just want to pluck out. And they're not so much as far as like teaching or anything that I learned today. These little points of my notes that I want to pluck out are notes of encouragement for myself and the rest of the gang. Cause just like when I was talking yesterday, and I was like, hey, let's shout out the Spider Gang. What did I say? Member of the month. I said something. I can't remember what I said. Talk about Marcia. Anyway, because I try to make it interactive and I try to ask questions to get y'all to respond. And the way y'all respond, I say a good 85% of the time be in line with what I'm thinking. So I'm thinking, okay, we're on one accord. So that's why a lot of times when you hear me talk, that's the one thing I don't like about this pen, right? It's a cap. I don't like cap off pens. I like the little clickies. And then it don't really stay. It's like really weak. But anyway, get on track, Tim. We all on one accord. And so the first thing I want to talk about on here, right, is I got it mixed in with my real notes, and I didn't mark the ones I want to just talk about. But so basically everything he was talking about today, it's like the majority of it is what we do every day, right? Instead of me trying to go through and read through this right here, right now, because it's just going to frustrate me. The majority of everything that he was talking about today, we go through it every day. From like the way he said that Now, I can't say the only thing that if he does this on a daily basis is we don't look at the dollar every day, right? We peek at the dollar every blue moon, but it's one of the things where how he was talking about risk on and risk off with the dollar. That's one of the things that I think we kind of understand that. And for anybody who don't really understand that, risk on, risk off with the dollar when the dollar is strong, right? When the dollar is strong, the dollar going up. Oh, let me get it right now. Strong is risk off. Strong dollar, risk off. Weak dollar, risk on. Okay, yeah. It be kind of confusing me. It kind of confused me. So strong dollar, dollar going up, right? That's risk off because the dollar going up, meaning other currencies got the potential to go down. Growth companies and big tech companies and whoever that get their money from overseas, that's going to be bad for them. So people going to go risk off. They're not going to put their money into that because the dollar getting strong, which make other currencies get weak. So they're going to go risk off and they're going to move to safer plays that don't require, you know what I'm saying, those more risky companies, and they're more risky because they got to borrow money for growth, or they got to get a lot of their money from overseas. So risk off, right? Risk off means the market has the potential to come down because the dollar going up. Risk on, the dollar going down, and now they're going risk on. They're putting money into the more riskier plays, the ones that's going to borrow more money for growth, the ones that's getting more money from overseas money. You see what I'm saying? Because the dollar going down, when they convert it over from overseas, that's more dollars for them because they're making money overseas. So, you know, so risk on, risk off. So a downtrending dollar is the potential for an uptrending market. Uptrending dollar is potential for a downtrending market. Risk on, risk off. For anybody who don't understand what it is, now we don't do that every day, but he talked about that. I'm like, okay, in tune with that. Felt good about that. In tune with that. He talked a lot about once the market, wait till the market makes its move, and then look for your PD array to buy or sell off of, and then target the PD array to get out of your position. We talk about that all the time. I'm like, man, we cooking with Crisco right now. We know about the risk on, risk off. We know about if it's above equilibrium, right? We looking for a reason to sell this stuff he talk about. If it's above equilibrium on the price run, on the price leg, he would talk about once it run out the buy side or the sell side, then it come back down and have that breaking market structure. He called it the shifting sentiment, right? I call it the breaking market structure. I call it the shifting sentiment being the one in the middle. We saying pretty much the same stuff, right? But he like, once you get that move, you're looking for it to come back above or below equilibrium and target. He was talking mostly about the fair value gap because he said he's trying to stick to the 2022 mentorship, but you're targeting your PDA in the premium or the discount above that equilibrium on the price leg, right? I'm like, we cooking with Crisco. We all over. These right here again, for anybody who might just be tuning in or don't know what I'm talking about, I'm just running through what ICT live today. I took some notes, and these are just like words of encouragement to myself and the rest of the Spider gang who read this price every single day. and you know what I'm saying, in the hopes to one day be able to break it down candle by candle on the 1 minute chart with the level of accuracy that ICT does himself. Right, these are just some words of encouragement, some notes that I took in the midst of my study notes to encourage us all. He talked about this is an important note right here. I want to, if you go back and look at some of my older videos where I talk about like the order blocks, and I can't remember exactly where it is. When I talk about order blocks, anyway, I used to really stress and break down what made an up close candle or a down close candle an order block, right? A lot of times you'll hear me saying I'm looking at this as a potential order block because I'm anticipating it to become one, but I feel like I have slacked off a little bit lately on really explaining what the order block is, what makes it an order block, because it is new Spider Gang members coming in all the time, and what puts the stamp on the order block, what makes it an order block, is after you get the distribution leaving that the opposite liquidity. If you got an up close candle and we get heavy distribution down, or if we got a down close candle and we get heavy distribution up, right? It becomes an order block when we leave that area and make a fair value gap. The fair value gap being that I talked about this in some older videos. I can't remember exactly which ones, but I used to stress it because when I first started learning about order blocks, in some of his older content, he didn't go really deep into what the order block was. It was just the last up close or the last down close candle. And then I would see some videos when he'd be like, that's not my order block. It's not just the last up close candle. It's not just the down. And then I can't remember when he put it out. I don't know if it was in the core content. I don't know if it was in the 2022 mentorship. I don't know when it was when he put it out, but I was like, that's the piece I've been missing. It's got to be combined with the fair value gap. And I remember I used to break it down in my liquidity run reversal videos when I talk about, you know what I'm saying, having the, you know what I'm saying, when you leave and you had a fair value gap, and, you know what I'm saying, I was pointing out this is an order block because the fair value gap is there and all of that. Just wanted to add that note about the order block. I just been talking about the order blocks and marking them out, but I haven't been crystal clear on what actually made it an order block. I talked about, this potential order block, we about to break the high, break the low, but I never went back and put the stamp on what made it an order block. Speaking of another thing, when I was talking about the low resistance liquidity runs, listening to what he was talking about today, what I have been calling low resistance liquidity runs have just been the path of least resistance. And let me explain the difference of how I got it from listening to his live stream today, right? The path of least resistance is like, it's got the least amount of stuff to go through. Like, when I look at it, I'd be like, hey, we got to go through all these PD arrays to get to these lows, or we could just shoot straight to this high, you know what I'm saying? And it ain't no other PD arrays in the middle. That's the path of least resistance, right? Low resistance liquidity runs, that's more of the market hasn't reached the destination, right? Just say like today, for example, by the time the market opened, it had already ran the sell side liquidity before the market opened. Boom, it's reached the destination. Now that it's reached that destination, now it ain't in no hurry to go nowhere, right? The market is it's a red day. The market is down. It's already run sell side, and now it's just chopping, right? So to come back up for the liquidity to keep going down, that's a high resistance liquidity run, because you're going against the grain for one, because it's a down day, and you going trying to go up, right? So that's for one. The dollar, right? The dollar is still trying to finish a up move, and you're trying to go up on the index. That's two. That's resistance number two, right? Um, it's not in no big hurry to do nothing, because it's already made the move. It's made a huge move overnight. It done came from here to there and ran the sell side. That's three. All of this is creating this high resistance liquidity run environment, right? And so that's the difference that I glean from today's live between a high resistance liquidity run and just the path of least resistance, right? The path of least resistance just have less PD arrays in the middle, right? But the high resistance liquidity run is you got all of this stuff, the narrative, if you will, is stacked against you, right? But the market is steady fighting to get to this liquidity. And then you got Powell coming at 12 o'clock. So the market really ain't trying to rush in no real direction. So it's just chopping, and it's slowly chopping, trying to get back up to this liquidity. So that's the high resistance liquidity run, because you got all this stuff stacked against you narrative wise, and the market is fighting to get to that area, right? Just want to put that out there. That's what I gleaned from today. I'm not saying it's right, I'm not saying it's wrong, but what I have been calling the low resistance run isn't what he's identifying, what he was talking about with the low resistance liquidity run, right? The Dow theory, he called it Dow theory, but I was calling it the quarterly shift, because that's what he called it. But Dow theory, we had been looking at that. He had mentioned the same thing about that. We was on that, where I was like, let's see if we get our quarterly shift, our bearish quarterly shift, because the Dow, since the middle of January, the Dow has been making lower highs, and the ES and the S&P been making higher highs. And he pointed that out today. He was like, the only reason why I look at the Dow is for Dow theory. And he was like, and he pulled up the three and was like, if you notice, the Dow has been making lower highs and the other one's been making higher highs. He drew it out the same way that we had been talking about that I was like, okay, I appreciate that, firing and all on all cylinders there. These are just like little aha moments I was having all day long, because it's like, hey, we've been on it. Congratulations to everybody. Again, I talked about that, but he called it high probability. I talked about that when I was talking about when you want to look for your setup. That's what he called it. He called it high probability. And that, again, for anybody who don't know what I'm talking about, that's when after we run buy side or sell side, right? Followed by displacement, the aggressive move, which causes a break in market structure, shift in a market sentiment shift, whatever you want to call it. Meaning, we gonna run buy side, right? You run buy side, and so that leg that you was going up to run that buy side, when you come back down and you break that swing low, coming from that low to that high, that leg there, when you come down and break that swing low right there, that's the shift. And now when it come back up, you're looking for some kind. Let me go to the chart, because y'all like, Tim, you wiggling your fingers all over the place. I do not know what you are talking about, my guy. Right? So Let's drop down to these 15-minute candles real quick so I can show you what I'm talking about right here. Show you what I'm working with. Show you what I'm right here. Let's come over here, right? So we got this low right here. Let me get me some arrows. Let me get me some arrows. Let me get me some arrows, right? We got this. All right, so we break down here, right? We come down here, break down here. Then we got this low that comes up like this. Make this fatter so y'all can see this right here. Yes, y'all can see that, right? We got this low right here that come up there, and it creates this breaking market structure right here, right? Or take out these, take out this buy side, right? Come above all these relative equal highs right here, and this swing high right there. So we get all these relative equal highs. We come up here and we take out this buy side, right? But y'all be able to see it. There you go. Okay, so we got this low that come up here, take out this buy side liquidity, buy side liquidity, buy side liquidity, right? Got this run that come take out this buy side, right? Then come back down, right? And have this breaking market structure right here. Breaking market structure right here. All right. Come up. Breaking market structure right there. Once we get that breaking market structure right there, now we go on high alert, right? Because we came up, took out the buy side, and this is what he called high probability, right? So we came up, we took out the buy side. In this case, we taking out buy side, right? We came back down, we take out the sell side. Now we go on high alert, and we start looking for our PD arrays. Where do we look for our PD arrays at? Because we're looking to be sellers, right? Because we just took out the buy side, then we came down and we had a breaking market structure to the downside, right? You could use this right here, but y'all already know. I look at this as the shift in sentiment right there. And then I look at this right here as the breaking market structure, because this is still within this price leg. But once we come down and take out this price leg, now that's just the way I trade it. You could trade it off of the first one. You could trade it off this first short term right there. I just like to do it off of once we break the leg, right? Once we break the leg and we come all the way down to the low where we broke, boom. Now we're looking for a reason to sell. We're looking for a reason to sell above equilibrium. This right here is equilibrium, right? We're looking for a reason to sell above equilibrium. Make it bigger so y'all can see it. Right, we're looking for a reason to sell above equilibrium. Right, look for a reason to sell above equilibrium, right? So now we got everything in place for a high probability setup, because now we have us a fair value gap. If you are a fair value gap trader in the premium, y'all know it's gonna drive me crazy if I don't get this perfect, but I don't have my snap on. I'm going to do my snap just in case. Right, I know y'all saying, hey Tim, we already know this stuff, but I done got too deep into it now. Right, so we got our fair value gap up there at above equilibrium. Right, we got our fair value gap above equilibrium there. Right, if you are an order block trader, right, we have a bearish order block above equilibrium. Right, bearish order block above equilibrium. Copy this. Right, a bearish order block above equilibrium right there. Now let's pick a different color. We'll go there. Right, and again, what officially makes it an order block, not just the fact that we left with this aggressive move away, but we have a fair value gap after leaving it, right? So, and we got two up close candles. So theoretically, both of this entire range is the order block, right? That entire range is the order block theoretically, but I like to just go with the last candle. When it's consecutive candles like that, I like to go with the last candle. So we got an order block, all of that above equilibrium. We have a fair value gap right here at equilibrium, but you want to try to get, and then with the magic of hindsight, we just shrink it down and see that we came all the way back, shrink it down some more, came all the way back up to that area today right here, right? Got right there just above that same old buy side liquidity line, right? Got right there, and then came all the way back down. The algos used Powell talking to push us all the way up there to that high probability short, and then brought us all the way back down and took out the sell side. So we use Powell to shoot up, take out buy side liquidity for the daily buy side, like yesterday's high, took out yesterday's high, shot all the way up above equilibrium, right? On this price leg we was looking at, where we came up and took out the buy side, right? Came up, took out the buy side, then we came down, broke market structure. Then we was looking for the PD array up here, right? So we came up to that fair value gap, almost to consequent encroachment, then drop back down, right? Then we pushed back up again a second time here, came all the way up to the top of the order block, and then sold off a little bit. With this order block, push it down some more, I don't know. Can't say that. Can't say that for certain. It's been choppy slop. You know what I'm saying? Like we took our buy side, came to the fair value gap, came down, took our sell side, shot back up to the order block, right? Started coming back down, ran out of time, right? Will we get down? We got a fair value gap down here. We got the weekly gap up that you can anticipate to act as support because it's the weekly gap up. We're above the weekly gap up, so you can anticipate this to act as support. We got a fair value gap down here. So will it come back and attack that off of the order block? Nobody knows the future, but I was just talking about high probability trades, and I just wanted to point that out. And then, I got a note in here about the high resistance liquidity run. I took some notes saying the market is printing conflicting PD arrays, right? The market be like I already said, like the we fighting against what the dollar doing, the dollar going up, and we trying to go up for the liquidity. It's a down day, and we fighting up to get the liquidity. The market printing conflicting PD arrays. What I mean by that is we like, just for example, let's look at this area right here, right? So we come down over here and take out this sell side over here. We go below the sell side there and hit the sell side on this this green sell side there that I had marked out. We hit that, right? So just say we anticipating it to hit the daily low right here, this white line, right? And then we start going back up. And when we start going back up, right, we didn't take out this low, but then we set this order block right here because we take off and got a small fair value gap right there. We set an order block there, and then we come up, consolidate, and then set another order block right there. So now we want to sell down, right? But now we're setting bullish order blocks. So now we've been coming down the whole time, right? But now we've started setting bullish order blocks. So it's setting conflicted PD arrays, right? It's setting conflicting PD arrays, meaning, okay, we bearish, we want to come down, but now we printing stuff to push us back up, right? So then once we go up, right, then we come back through and blow through all of this without even stopping. Blew through this fair value gap, blew through this bearish order block, bullish order block, blew through that bullish order block, came all the way back down to the sell side. You know what I'm saying? So it's like, what PD array do you trust? Do you trust the bullish PD arrays, or do you trust the bearish PD arrays up here? Which one, you know what I'm saying, is printing conflicting PD arrays. Now, mind you, this is far apart. So I don't question after coming way up here, then coming back down. But I was just talking about like the conflicting PD arrays. Again, right here, the weekly gap up, right? This, in essence, would be expected to keep price down, right? We get to the consequent encroachment again and wick down like we're gonna go down, right? Okay, maybe we are going down. Maybe we just coming to this right here just to bounce down. But again, we got this bullish stuff here, and then we still take off. Because mind you, we looking right, it came a stone's throw away from there. But then it went all the way up here with the news. Well, not the news, with Powell talking before coming down to run out this sell side. Oh, and speaking of that right there, I'm glad I said that. I put a comment in the chat this afternoon after I had woke up from a little teeny nap. I put out, I was like, hey, you know, pretty much high price trading right now. I'm not interested in I wouldn't be interested in trying to get no calls to go run through the buy side. Not saying that it won't do it, but it just didn't come to my point the way I wanted it to come to be able to buy in. And what I mean by that is based off of what we talked about, right? Looking at the daily candles, you may look at the daily candles and be like, hey, Tim, it did exactly what you talked about, right? Right. It did exactly what you talked about. It came down, had a reaction off of the daily fair value gap with this long wick right there. Then the next day we opened up, came to a discount, then went up. Looking at the daily candles, it looked like it did exactly what I wanted, right? Two things that it didn't do that I wanted. First thing it didn't do, it didn't come down as deep as I wanted it to. Yes, it did come down to the consequent encroachment of this hourly fair value gap that I had talked about right there at the 40.9875. It did come down to there, but it didn't come down to there until after we had ran out the buy side. We came all the way up here and ran out the buy side before coming down and taking out the sell side. Me no likey that. Me no likey that. Ho ho. And the reason why I don't like that is because when we came all the way up here to take out this buy side, then reversed all the way back down to take out the sell side, we have just broken back to the downside to maybe continue down, right? Now, the reason why I said don't let me talk you out of it, if you still believe it's going to hit this up here, it's just the way I trade and what I wanted to see. I didn't feel comfortable with putting any risk on the way it traded, coming down and then going back up and coming down again to get the sell side. Yes, we made a weekly low on Tuesday, but we made that weekly high first. We made that weekly high, and then we came down and took out the sell side to the low. And then we pushed back up, right? And then we pushed back up. So what does that do, right? What does that do? That puts us in a position, again, of it not being a high probability, a high probability trade for buying, because we come down. Let's drop down to the 15-minute chart again, right? Right. So we come down, right? Come down here and took out the low, right? After we went up and took out the high, right? So we went up, took out the high, then came back down and took out the low. Once we took out that low and left all these PD arrays back here, right? I'm looking for price to maybe come back up to sell back off. That's why I was like, hey, I'm good, because I don't like what it's doing right now. I don't trust it right now. It could very well keep going and take this, because the whole thing was to, when it come down here to a discount, buy it to ride it back up to there, right? But once it took out the buy side, right, and went to a perfect spot to sell intraday, then came back down and took out the sell side, right? This, in my mind, is setting up to go short, because we've took out the buy side, came down, took out the sell side. Now I'm looking to come back here to sell back down. But again, it's totally disrespecting. It blew through that fair value gap. That fair value gap blew through the weekly open without no resistance, came up, got all the way back up to this order block, and then started to reverse again, right? What is it going to do? Is it going to keep sliding, or is it going to keep going? What is not, it's not trading very probable, if you will. Very probable, if you will. And then don't want to talk about that. Talked about that. We always be talking about the Sunday gaps. We talk about that a lot. He talked about that. Another encouraging bullet point for stuff that we on the right path. We're on the right path. Wicks are gaps. We talk about that all the time, because I ain't gonna say all the time, but lately we've been talking about that a lot. Where we be looking for the consequent encroachment on the wicks. He was talking about that as being like targets and places to see how price react to those wicks at consequent encroachment. We be talking about that. Another feather in the cap. Oh, these last two things right here I want to talk about real quick. Well, ain't really nothing to talk about, but he mentioned now in previous videos, he talked about, he dropped the gem about the 950 to 1010 macros that run when price is going to make a run on liquidity, right? Today, he dropped the gem that it does the same thing from 1050 to 1110. And then he dropped the gem saying that there's 3 different macros that run during the last hour of trading. He didn't say what those macros were today, but he said he will be. He was like, they don't all 3 run at the same time, but it's 3 macros that run during the last hour of trading. And he was like, he will be breaking those down because he's going to be doing afternoon streams. And so I guess during the afternoon streams, he gonna break down. He didn't say what time, but he just said it was 3 during the last hour. So I made sure I put a note of that. And then he also dropped the gem about the 1050 to 1110. So you got the 950 to 1010, you got the 1050 to 1110, and then it's 3. He called it the lunch macro from 1050 to 1110. That's the lunch macro, and it's the same thing. It's designed to make do a liquidity run, a liquidity grab. You know what I'm saying? Like shoot for the liquidity. If you coming out of consolidation, if you trending, if you're doing something, it's either gonna hit some buy side or sell side or hit some imbalance. Right. So that's all I want to share. I just want to talk about what OIC Tizzle did today, and I want to share some of the notes that I took as just words of encouragement to the gang, because I feel like we on the right path, man. I feel like we're on the right path. Today was just a whole lot of confirmation for what's been going on. I think I tweaked something when I was at the gym yesterday. That's some high quality H2O right there. Let me see what y'all talk about in the chat, then we're gonna get up out of here. I bet you know more than you're giving yourself credit for. I called him twice, morning and afternoon. He says, oh yeah. Oh, he went live this afternoon also? Okay. What did you do this afternoon? Did he do like a market recap or something? Per Rummy Rome, the rate hikes could last until 2024. Okay. Lagging indicators and ICT don't mix. What's up, Tranisha? What's up, Lamar? What's up, Mendel? Laverne, FC, SJ. Here, Learning Share, KC, Rhonda, Marcia. What's up, y'all? What's up, Black Al Davis? What's going on with you? Oh, that's nice, Tim. What's nice? What's that, a book? Oh, my book. Oh, that thing over there? You talk about my book or that thing over there? Whatever that is, yeah. I don't know. Whichever one you talk about, thank you. It looks like you got a notebook right there, so I'm assuming you talk about my book. Appreciate that. That was a long time ago. So, what's up, SJ? What's up, Ruben? It was so much I have to review the video multiple times. Way too many gems. Yes, it was. He is intense. I like it too. At least you found out early in the game. Talk about ICT. What's up, Michelle Tucker? What's going on, Hines? Algo aficionado. I'm sorry. Choppy morning session, but so many gems in the first. Yes, it was. Enjoy the live stream, choppy morning. Yes, I'm so glad it was a choppy morning session because it gave me the opportunity to sit down and just like regurgitate so much good information. Like the market wasn't just like giving. You you know what I'm saying, like just ripping and running. It was just sitting still. So he had time to just sit there and just talk about so many different things, and it just make me feel like, man, I'm closer than I think. I'm closer than I think. It's like it was just eye-opening. Just everything he was saying was stuff that we talk about almost every day. I'm like, man, closer than I think. Just gotta have more confidence in myself. Yes, the live stream was amazing. Tape reading. We do the same thing, and I appreciate it. That what I'm talking about. Shout out Marcia. What's up, Robinson? What's going on? Been in strategy offsite all week. I'm missing all the fun. Oh, strategy offsites. Man, don't be coming here talking all that military talk. Fair value gap. I like the order block fair value gap trade. I heard that today about the order blocks. Oh yeah. That's I think it's in the core either the core content or the 2022 mentorship when I first found that out about the fair value gap is what makes it the order block. And I've been neglecting to mention that for like because I just take advantage that all the people that be tapped into my lives been here for a while and you know that already. So I I'm gonna try to do a better job at like just make sure I reiterate stuff. What's up, baby? You welcome, Earl. Earl said, I appreciate your help, Mr. Tim. Earl, you must be new here. I appreciate you, Earl. Uh Market review, yes, sir. Okay, market review. Okay, great recap. What he did a great recap. I'm gonna have to go check it out. Thanks, Tim, for watching ICT so I don't have to. You been hanging out with Robinson too long, Michelle. You been hanging out with Robinson with too long. It was good. Tell a tradition. It was good. Really good practice. Good to see how market structure works in consolidation. Okay. Maybe I'll watch. Yes, watch it this weekend, Michelle. Watch it this weekend. But I get a headache looking too long at it. Yeah. Tim, I'm deploying in May. Hope I will get a chance to watch your lives. You watching it right now, Tim? Oh, you talk about when you deploy? Okay. When you talk about when you deploy, okay. Man, go back to your offsite strategy. Your strategy offsite, man. Go somewhere, man. Hey, like, before we wrap it up, let me share this, man. Let me share this. I mean this from the heart, man. I mean this from the heart. I mean this with all the love I got to give you. Every time I poke my head on Al Gore's internet, right? And I don't know if it's because I talk about the stock market, if 90% of the people that I follow talk about the stock market, but whenever I poke my head out there on Al Gore's internet and it's got something to do with the stock market, I ain't even got nothing I can pull out. It's like somebody just opened up a fire hose and stuffed it in your mouth with, look at this. We got this. It's too much, man. It's too much. Look at, man. I don't even care if you don't even pull up on my channel no more. Find that one thing that worked for you. That one thing that worked for you. And block out all the other noise. All the other noise. I'm gonna keep it 100 with you. The only thing I focus on for making my trades is this price action. That's the only thing I focus on for making my trades, right? I stay mindful of what's on the economic calendar because I've adapted the skill of being able to anticipate where they may push price based off those red and orange folders on the economic calendar, right? Based off where they may push price. And so when they start to push the price, I can go in and make a pimp's decision like today and be like, you know what? I don't like what price doing right now. I said I wanted to buy if we came back down below this low, if we got back down to this consequent encroachment on this right here, but I don't like what price doing right now. So I'm back off. If it still go up there and get those highs like I really wanted to, so be it. We still inside the zone where I said I really don't want to touch it anyway, but so be it. Let it go, right? I ain't worried about what the market. I seen somebody post something the other day and was like, what if, and they had like 2008. It was a 2008 chart and then a 2023 chart. And it was like the rally only lasts 3 weeks. And then the market fell 50-something%. And I'm like, who cares? And they was like, history don't always repeat exactly, but it rhymes. And looking at who cares? Stop overloading your brain with all of this foolishness. Stop overloading your brain with saying, oh, it looks like we might do what we did in 2008. So, Jim Cramer said, oh, look at this, look at that, excuse me. Look at all this other stuff. Man, you would drive yourself crazy. I can get on Al Gore's internet and I can build the perfect argument to keep going up to 4,300, and I can build a perfect argument to fall back down to 3,500, just based off of the professionals on Al Gore's internet. I can go out there and put together the perfect argument to convince anybody that we gonna go up to 4,300 or convince them that we going down to 3,500. Don't all if you into all that stuff, more power to you. But me, I like preserving my peace, and I'm slowly getting better at reading this price action, and I'm convinced this how the market book as ICT say. As ICT say, I'm convinced this how the market book, and until somebody can show me something better than this what I'm doing. All right, just take it from me. I'm just doing Fort Lauderdale, Florida. And out of everything I've seen since I've been dealing with the stock market, right? Everything I've seen since I've been dealing with the stock market, right? About 3 years now. I've been dealing with the stock market. These ICT concepts are the most precise, the most consistent that I've ever seen. I ain't seen nobody who talk on a macro level that hit targets as precise. I ain't seen nobody that talk on a daily level that hit targets as precise. I ain't seen nobody on a macro or daily or whatever level that hit as consistently. Never. And you can say what you want about technicals don't mean everything. Fundamentals don't mean everything. You can say what you want. All I know is, like ICT said, that he called it technical science. It's not technical analysis, it's technical science. That's what he called it the other day on one of his names. But I sat there and I watched this man prior to 2022, I watched him just talk about stuff on the internet, put out videos, put out recap videos of stuff that he had done, right? Amazing. And then all through 2022, I watched him post videos of stuff that he did every single day for all of 2022. And I've only seen him have 2 losing trades for an entire year. 2 losing trades for an entire year. And then you say, okay, he's just not posting his losses. Say what you want. But I've only seen him have 2 losing trades for an entire year. And since the beginning of January 2023, it is now February the 7th. And he has not been wrong yet in 2023. Every trading day, morning session, afternoon, he has not been wrong yet. Trending, chop, consolidation, he ain't been wrong yet in 2023. So, if you want to convince me that there's something better than this right here, yeah, you got a lot of proving to do, because this man has proof of concept. You ever seen like people talk about proof of concept when they trying to sell you a course? He got proof of concept. You got to come with a lot of proof of concept. But I said all that to say, man, get off Al Gore's internet with all the people. Man, I swear, people be posting so much stuff, and all thing you're doing is going out there looking for somebody to co-sign your bias. That's all you're doing. I'm keeping it 100 with you. When you go on Al Gore's internet looking for information, right? If you're not going to the company itself and reading their financial statements, reading their what you call them, the meetings, what you call the earnings calls. If you're not reading the earnings call notes, about not notes, but the transcripts. If you're not reading the earnings call transcripts, looking at their financial sheets, looking at what they got going on, what they researching, development department doing, what they investing in, if you ain't looking at stuff like that in the company yourself, if you're going to these different blogs and news sites to get information about the market, you're just looking for confirmation of your bias. That's all you're doing. I'm just keeping it 100 with you. You're not going out there looking for the opposite side. You're going out there trying to confirm your bias. Now, you may peek at the opposite side and say, they tripping. You know how many people I see every day when I turn on Al Gore's internet? They like to use that trap word. If the market going up, it's a bull trap. If the market going down, it's a bear trap. Oh my God. Is everything a trap? Is everything a trap? Why does everything have to be a trap? You know? Stop trying to confirm your bias. Learn how to read the price action and just go research your company that you want to put your money in. If you're not an index trader like myself, if you prefer to invest into individual companies, learn how to read the price action on the index to give you an idea of where the overall market going. Go to your company websites, look at their balance sheets, look at what they got going on, read the news from their company, what they're saying, what they got going on. You know what I'm saying? What they talking about, good or bad in their company. Read information on their research, your company. Don't go to these other sites looking to confirm your bias. Go find the real information, learn how to read the price action so you can make an intelligent investment decision. And I think we'll all be in a better place. We all been. What's up? What's up, Roman? DR, IDR fam. Not you, Tim. uh, just stay locked in. You 30 people watching. Hit the like button. Yes, y'all hit the like button. I see 54 people. I don't know how many really in here. Hit the like button. Hey, man. I know I've been going on a long time. I've been on here for over an hour. But before we go, I want to let you know. Well, I want to ask you, please do not put off till tomorrow what you can say today. Let those that you love know that you love them today. Don't just say it. Don't just show it. Say it, show it, and confirm it. But Tim, why do you always say that? Because I truly believe that is important. My kids broke my heart into a million little pieces because I thought I was the best dad in the world. I thought I was super dad. I thought I couldn't do no wrong. And they was under the impression that they had to get out my house when they was 18. I never said this. I guess my actions did. I wasn't showing my love in the way I thought I was showing it. Broke my heart. I didn't go see my dad with my daughters when they were babies. He was about an hour across the bridge. I kept saying, hey, we'll go see Granddad next week. Because I ain't feel like driving across the bridge, then taking them back, then coming and driving 4 hours to get back home. Next week never got here. He died on the operating table. Don't put off till tomorrow what you can say today, man. If your parents still here, call them up. Hey, mama, hey, dad, I love you. Your kids that still with you, still stay with you, go in there and hug them. Tell them you love them. Hug your spouse. Tell them you love them. Call your grown kids. They may not answer just like mine, but call them and tell them you love them. All right? Appreciate y'all, man. I'll see y'all in the morning at 9 o'clock for the overnight price. Action. I don't know when ICT gonna do his next live stream, but again, from now until November, whenever he be doing a live stream, I won't be doing if he's live streaming in the morning. If he's live streaming in the morning, I won't be doing my morning live streams. But if he's live streaming like in the afternoon, if he say he gonna do the afternoon session, I'll still do the morning live streams. But whenever he's live streaming in the morning, I will be sitting right here with the master plan and this pen until it runs out, ready to take notes, ready to learn, ready to study. But Tim, why you studying? Because I can always learn more. Appreciate y'all, man. I see y'all in the morning at 9 o'clock for the overnight price. Action. Enjoy the rest of y'all night. Enjoy y'all family. Enjoy your dinner. Everybody except for you, Robinson. Everybody except for you. Until you do right by me. Until you do right by me. Everything you do. I see y'all, man. I'm gone.